The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Hi everyone, Basil Chapman sitting in for the vacationing Steve Rhodes. My pleasure to be here today, and usually I'm the next hour, 11 o'clock till noon. That's Monday through Friday on market days, and 877-927-6648 is the number to call, as you know. And let's just get straight to it. But first, I do want to say thank you, John Logan. Thank you, Tom O'Brien. Just a great couple hours there. And we hope to be able to move you to the next 2 hours, be able to go through all these different indices, etc., and we'll be able to analyze it together. And what is today? Today's Wednesday, and then after that you get Larry Pesavento. So let's go straight into the market. The Dow is up 95. One of the reasons why yesterday I said to my subscribers that unfortunately I had a really busy early morning. I had to leave early. I got my stuff out by 7 o'clock. But I said, because I haven't finished everything, I want to update at 12:30. And normally what I say about updates for my work, over all the years, I can recall just one occasion where we got perfectly the DXD 200% short. It was like a March or something of way back in the 2000s. And it was just a perfect time, because if we never got that, we wouldn't have had a great position on the short side of the market. But almost every other time I found that you could very well do it the next day and get even better prices. But I wanted to do it because my instinct said everything that I was looking at suggested that there could be a rally off the 9-period exponential moving average in many of the indices, because the weight of evidence from Friday's close was so strong that there should be more upside. And then I had a position that we were going to buy a 300% long on one of the indices. We would have got it just perfectly. The stop would have worked, everything. And then, sometimes it happens. I was thinking, I don't want to be messed around by going long, short, long, short. Maybe I should, just to be safe, I'll do the update at 12:30, and I'll just pull the recommendation. I pulled the recommendation, and that was just the perfect trade. That's the way it goes. You do your very best, and sometimes after all that analyzing, there's this emotion. And I always promise myself, don't let the emotion get in the way of the trade. You've done your homework, for goodness sake. Go ahead and pull the trigger. But what happens is that sometimes it looked a little uncertain just for a moment. So that's the way it goes. However, we did get one other position which is working really nicely for us on the long side. So we have a mixed portfolio, shorts and longs. Now let's just get to the nitty-gritties. In fact, let me just run the numbers as I do it. Here's the E-mini, up 8.50. The Dow's up 9.93. The S&P's up 10.2. So they're up 0.51% and 0.49% respectively. This is only up 0.39, actually only up 0.41%. And that says to me there's a little discrepancy there. We'll have to wait for about another hour to see if it irons itself out. Let's see what happens. Meantime, and I'll be here, so we'll watch it together. So this is the E-mini. It's made the leg C. Now, what's really fascinating between the E-mini and their SPY is that if the SPY goes to 210.64, what's the height today? 210.71, it started a leg D. Now this, I love this. This is what I call the Chapman wave overlapping wave. So let me see. In my CD, Introducing the Chapman Wave Methodology, by Basil Chapman, Chart Analysis in the Stock Market, 476 slides. What we're looking at, and in the den, Peak D says, yes, we're seeing a lot of overlapping waves, correct. What's really important about this is that if I go to chapter, I believe it's 16, let me just double check here, chapter 16, yep, the overlapping wave. This is a very, very important technique. It's just based on the chart pattern itself. You don't have to know Chapman wave methodology, but it really does help to know your lettering. And what happens, let me move, I think this is a better one, overlapping wave, yeah. And what happens is that you have a rally that goes very nicely. It can go to B, but very often it goes to C. At that point, that's peak C. From the lowest low bar, you merely count each successively higher peak. And then there's a pullback. The pullback is a little bit deep and a little bit long. Sometimes it takes much longer than the one that I'm showing here on slide 322. But what's really important about it is that out of the blue, it triggers a new buy signal. And that buy signal says, I'm going to go higher. And within that context, it suddenly makes another peak A. I call it a gray A or a sub A. And then it goes to a B. And then in this case, and now in this particular instance, what happens is all of a sudden it goes not only above this most recent peak B, but also the old one that looked like it had aborted. It reactivates that, and together it becomes a powerful move to the upside, invariably going to a leg D, then a peak D, and then there it is. And then what happens is, there it is. This one even went to an E and an F. And then it plummets and it goes back to the breakout point. That is so fascinating. Why? Because we've got an overlapping peak C. This morning we've just snuck above leg, the peak D, this leg D has gone above 210.63. It has not gone above 211.27. And there's a real good chance, usually it's the same leg. In other words, this bar that we're looking at now, somehow or other, has to continue making higher highs in this leg D until it breaks above 211.27. And at that point, it extends a little further, and then you got to be careful. Why? Because it comes out to the breakout level. So, and then MDY in the den, we've got MDY might have the same thing, MDY. So that's, all right. Well, let me just do this because I've got a slight A, B, C, D. Yeah, you could be right, but this one will be at a more advanced letter. Okay, let's just go through these different indices. So you've got the Dow, INDU. Oops, over there. Dollar, INDU. So I get the dollar. Okay, so the Dow is in leg C. Potential overlapping here, a wave here as well. If it fails, now this is different. This one needs to fail underneath 18,205.93, the high of the 23rd, pull back, and then whoosh, together it makes a leg D, overtaking whatever this peak C is, and overtaking that peak C over there. No, no, no. I'm sorry, I have to say that again, because we've got a new buy mode from a lower low. No, this is just a brand new buy mode. That's all. So let's scrap that. I'm sorry, I was busy looking at tops instead of bottoms. We went to a lower low in the Dow at 17,579 on the 26th of March. This starts a brand new peak A, peak B. This is leg C. But what's really important, look how you've broken through the Chapman wave falling axe resistance, and the inside track repellent zone, which was a repellent zone for 3 days. Pow, we've gone right through it. Very nice action. And so let's continue here. So that's the Dow. It looks like it wants to head towards the 12,288 level, but we're going to go one step at a time. All right. We get rid of the 120-minute chart in leg C. There we go. So that means the support is yesterday's close or today's low in that area. And the low today is 18,000 and 45. So the whole 18,000 area, that has to be support. S&P, SPX.X. So very difficult because I'm sitting in Steve's shoes. It's there's a big shoes to fill. I do my best here, but what's really important is I have the technique of the Chapman wave looking at peaks and troughs and many other techniques, a myriad of techniques. And one of the techniques that I spend a lot of time on and discussing it for my subscribers to my opening call for a couple of weeks now is that this challenge of the Chapman wave inside track resistance area, that's going to be big. And now what we've done is we've gone into leg D. Look, leg D and then peak D was the top, going to the 2119.59 high in the S&P on the 25th. Peak D was the top, going to the 23rd high, March the 23rd at 2114. Is this going to be a top? Well, the MACD and stochastic are holding very well in the daily. The stochastic and the MACD in the weekly chart is okay. It's not yet very strong. It has to, MACD has to cross positive, and stochastic has to get over 80%, only at 73%. But here's what's really interesting. We went to a peak C1, C2. Remember, that's how I said we could get a pullback. Now there's a chance, quite a good chance, that we're going to go to a new high above the 2119.59 level in the S&P to make leg D. And then you got to be somewhat careful. But what that does is it recycles to a G/C, the monthly chart, especially after such a narrow peak, only 2119.59 and then 2117.52. What is it, just a fraction over 2 points for a monthly peak? So that says to me there's still internal strength, even though the MACD and stochastic are weakening. Then for my subscribers, I'm hoping by this weekend I can show you a chart that I've been working on that kind of outlays for you another alternative. I'd shown the one that said March to April could be a consolidation with quite a bit of a pullback. Oh, I've got Joyce holding. Joyce, I'm so sorry. Joyce, I'll be right back. I'll be with you in a moment. Wow, I forgot about that. Joyce, I'll be with you in a moment. Our first caller. Right back, Joyce.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction funds. To obtain a prospectus or summary prospectus, please contact the Direction funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. We're back. Basil Chapman sitting in for Steve Rhodes. And let's go to our first caller. We've got Joyce. Joyce, how are you?
I'm doing fine, thank you. I'm looking at tree.
Okay. So, Joyce in Clearwater, we met once, right?
No. Mm-mm.
Oh, we've never met. All right. I remember a Joyce from, I thought it was Clearwater, but maybe it
I
wasn't.
call every once in a while, but I haven't
That's
met.
right. I hadn't heard from you for a while. I thought, okay. All right, Joyce, so this is it. We're looking at Tree. Do you have a position in this, Lending Tree, Inc.?
Yeah, about $7. I was thinking about buying more.
You have it from way back at $7?
Yeah.
And you're calling me?
Yeah.
Joyce,
buy
I
more.
should be calling you. What is this?
I keep wanting to buy it, and they keep saying, well, it's too high, and it's too high, and it keeps going up, and I got tired of waiting for it, so I figured
So you sat through that very sharp pullback in 2014 from the 35 area down to the 423 area?
Yeah.
And you sat by, and then it suddenly, I tell you what the issue is with this. I remember when it came public. I remember thinking at the time, this is a very interesting company. They have interesting concept, and this is a perfect time for them. And then it just went out of my mind. And it's one of those names, Lending Tree. It's like a generic name. Sounds like a game that people play. Well, it's an amazing stock because I'm looking at it here. It's trading just a point or two off its all-time high at 57.70. Let me just repeat that. Joyce bought it at 7, and it's now trading 50 points higher. No. It's buying 50.70 higher. In fact, it's even today, it's up 1.13%. Now the question is, I had a question like this the other day. I have it in my notes here, but I don't know if I'll find it in time. There was a stock that someone had called about that they also had a position in, and it had done fantastically, and they'd taken profits at 80, at 78, and it was at 83 or 84. I can't even remember what. I can remember everything about it, the chart, the works, except I just don't remember what the name was. And wanted to know exactly the same question. I'd be missing the add-on, although he had been adding for a trading position, but the last time he got out with a really nice gain, it went about 5 points higher and didn't know what to do. Your chart formation here is very much the same. I remember it was a defensive type stock, so I'm getting closer. And the other thing about it is that what I'd said to him was, stocks that are making all-time highs, especially in an environment like this, will probably continue to make new highs because it's a safer bet to go for leading stocks than to go for the ones that are trying to make a bottom and could very well drop 10 or 15% very quickly, not finding the bottom. So this is a very difficult question for me to answer, in the sense, I don't know what your portfolio is. I don't know anything other than you bought it and you've got a fantastic profit. I'm going to say that the core position that you have, at least for this period, while I believe that we're going to Japanize our bond yields, continue to do that. In other words, yields will remain low. They could vary, but they will still remain fairly low. Even though this has got a kind of a topping formation that says the upside can do the upside, but it'll be limited towards the 59, 61-ish area if it does that. But there's a chance that it's going to, over the period of a week or two or three, start to test the low that was made just recently at 54.91. And my eye says, based on the weekly chart, that although I've got it in a weekly chart, F/B in the Chapman wave, that means that F is, you got to be real careful. B says, boy, every single drop you need to buy. So that means you need to look very closely at the technicals. And right now, the technicals, 89% in the weekly stochastic, MACD is strong, monthly's at 90%, and the MACD is very strong. I'm having a tough time. I'm having a tough time in terms of saying, because you didn't take other opportunities, now that it is so close to the all-time high, with maybe from 57.50 up 3 to 4 points, that's very nice. That's 8%. But there is a chance that it kind of gets stuck in the next week if it pulls back below 54. And then you're going to be looking at the between 53 to 50 as really important support. And after a move like this, I don't see any reason why it doesn't take an opportunity just to have a bit of a breather. So if you give me there's music coming on right now, give me a moment and I'll give you a plan that I would be looking at, because I think adding to it is the right idea. Can you hold on?
Oh, sure.
Thank you very much for holding. Joyce in Clearwater. We'll be right back. Dow's up 78, S&P's up 9.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com, educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. We're back. Basil Chapman sitting for Steve Rhodes, and it's my pleasure to be here, but my show is normally the next hour, so we've got Joyce on the line from Clearwater, and we're looking at a stock that she's had for a long time, had fabulous profit, and it's still got a profit in it. It's called Lending Tree Inc. It's Tree is the symbol, TREE, trading at 57.68, up 82 cents. So this is what I did during the break. I did a whole bunch of analysis based on the daily chart, and I give you parameters that you need to watch. I'm also going to, while I was doing it, I was thinking of two ways that you could actually trade this. One is, because you aren't in it at all as a second position right now, you've got to forget about that first position. That is like another trade, another stock altogether. Don't even, just keep it out of your mind, at least for the next, I think through April, it's still going to do very, very well. On the shorter term, this is my thinking. There are two, it's fighting two particular patterns right now. The way it's got this very gentle rolling over, it went to a high recently of 58.69, but that high a week and a half before was 58 round number high. Now it's broken above it, but it hasn't closed above it. So I'm going to make the suggestion, because I know, if I recollect correctly from your calls from previous years, that you have a lot of, you've proved it right here, you have a lot of patience, but you also like to get a longer term trade. You don't want to just day trade or week. You want something that you're going to be able to establish some kind of weight, WEIGHT and WAIT, to the position, because you're not going to fuss if it drops a little bit, but you're really looking for the move to the upside. Is that correct?
Right, yeah. Mm-hmm.
Okay, so this is what I'm going to suggest. Why not at 57.68 buy just, it might feel like a waste, but I'm doing it for a specific reason. You just nibble on it right now, 10, 15 shares, doesn't matter what it is. You get your foot in the door for two reasons. One is, if this pushes towards it's at 57.68, if it goes to 58.30, there's just a real chance that not only is it going to hit 58.69, but it's going to take it out. The moment it takes it out, it sets up for me the chance that that's probably going to be new leg B. I can make it leg C, but at least a new leg B. And if that's the case, the two fighting patterns, the one is the arch formation that includes a little bit of a down channel, and the other is rallying towards and then above the inside track resistance starts to kick in. And then what I would do is if it goes like 1 penny above 58.69 high, I would add another small position to the trading position. Now what you've got is just one small position made up of two smaller positions. And the only reason is I'm still expecting that it's going to consolidate. But what it's going to do for you is that as our general market unfolds, if and when there is a change in direction, both in yields, that's the bonds and the bond yields, if there's a change in direction of the dollar, and if there's a change in direction of the market, and yet Lending Tree is able to hold in the 55 to 54 area for the entire next 3 weeks, you've got yourself a really, really strong stock. People will fund managers will gravitate to that, and it's going to give you a good feeling. You don't even have to buy this little bit. I'm just saying, what if it breaks to the upside? I'd rather have you participating than not participating, even though it's a small position. You were going to ask me a question?
No, I'm listening.
Okay. So, and one of the reasons why I'm saying that is that the technicals in the daily chart have deteriorated, and yet the price is holding the 9-period moving average really well. That's number one. Number two is the weekly chart is showing no signs of deterioration, and the monthly chart, we're only exactly halfway into the month, so I really can't talk about it. I can only say up until this very minute, the monthly chart is still looking good. So I thought, you know what? Favorable stocks right now are continuing to find buyers. Unfavorable stocks, you can see they're going down. Even the ones that were favorable before are struggling to regain their upside energy. Your stock's acting well. It's just digesting a really good gain. So does that help you a little bit?
That's fine. Yeah, I'll take your advice. Thank you.
Okay. Now, the only other thing is, Joyce, if at any point, regardless of what you do now, if in the next 2 weeks you see Lending Tree between 55 and 54, if you don't mind and you're available, give me a call and let's look at it then.
Okay. Thank you very much. I appreciate it.
Okay. Thank you so much. And congratulations on having fantastic staying power. That's terrific.
Thank you. Bye.
Thank you. So, folks, this is very interesting. Now, what was it? LC that I saw LC move along yesterday. Yes. Oh, look at that. LC's Lending Club call. Heard it mentioned yesterday, and I might have heard a little bit of the interview. I'm really not good at listening because once I see a stock, I start doing my analysis, and whatever's being said about, I think it was the CEO that was talking about it with Kramer. But I liked very much. I wanted to see a little bit of a pullback, and it got it this morning. I should not have taken it off my radar for a day or two. I was going to just hold back and see what happens after the interview. I'll still wait because I think it's turning the corner after being hammered since it was an IPO back in, was that January or something? Back in December. In December, it comes out as an IPO, has a low of 22.31. Rallies to 29.29 with an open round number 29. Amazing how these IPOs always fit in a round number somewhere. Makes this high and then pulls back all the way to yesterday, 2 days ago. The low was 17.61. Doesn't look like much. It looks like much on the chart, but in price it's only 2 points. Well, the 2 points happens to be 10%, 11%. So that's not the issue. The issue is it took its time. I like when IPOs pop, then fail, and then take a whole period of time to establish new buyers, fresh thinking, and that I think is happening here. So I only mentioned it because it was purely coincidence that I'm not even sure they're in the same lending area, but it is called Lending Club Core, and the other one was called Lending Tree. And I thought that was another way to at least look at this particular sector. So now we've got a couple of questions in the den. XLE. Yeah, the XLE, remember what I said? Looked very strong. if it got over the 80.30, I think I said, or 80.50 area, good chance the next level will be 82.84, the 200-period moving average. But in the context of my weekly charts, this is just the H pattern. Let me just find it for you. In the chart pattern analysis that basically is dealt with throughout this book, the CD book, Introducing Chapman Wave Methodology. One of the things that I look at here is the lowercase h pattern. And if we go to chapter 17, right here, the dreaded, we used to call it the dreaded H pattern. You can still call it the dreaded H, but I think H doesn't have any implications to it. There's no baggage there. It's just the H, lowercase h, and then you can do the analysis based on that. There's the H pattern failure. So you come down sharply, you rally and you fail. You take out the left side low bar, plop, you go down further. Try to rally, it's a bigger one, and then you go plop and you fail. Then there's an even larger lowercase h pattern, and then it goes to a lower low, and then other things can happen. What are they? Like this. The H can go to an M pattern. It happens over and over and over and over again. So when I'm talking about that, look what it is. We saw that in the gold. We saw that, we've seen that in almost all the commodities. We saw that in oil. Lowercase h goes to a lowercase m. And then what happens if there's a successful test of the left side low, it doesn't break it, doesn't even touch it. Then you can have a rally that takes you above the previous left side arch, in this case, 82.43. What is 82.43? That's the weekly chart. It happens to coincide with 82.84, the 200-period exponential moving average in the daily chart. So what I'm looking at here is that oil has made a turn. I'm saying a turn, not the turn, but a turn. Commodities are still under attack. The commoditization of yields of commodities, of everything is still underway. But this is a very necessary, after being pounded from the 101 level down to the 71.70 level. The XLE deserves a retracement rally, and this is actually going above 82.43 stars leg B in the monthly chart. And all I can say is this is the pattern I'm going to be drawing in right here, and I suspect below around about 84 to 85 you will get a reversal in oil for whatever reason. That's going to be the big test. Does it come back and go back into the 76, 75 area, or does it just take a moment's breather and says, hey, I am done. You need oil. You're spending more. I'm going to be showing you what's going to happen to prices. But I think that there's a lot of oil around. I'm not sure about this. Anyway, that's my analysis with the XLE. Looking good. A retracement failure mode, that's what I believe. The H goes to an M, could be a continuous M pattern. You could even get a larger rally, but I still think we'll be coming back into the mid-70s as the real test of internal strength. Next question was DDD flying. You know, I've been seeing more and more uses for the 3D stocks, no, 3D equipment. Some fantastic things are going on, and I would not be surprised if in the arts, the 3D concept of molding to your own specifications, all these different designs, I would not be surprised if it's going to be big business. And it could be big business even for just, you know, like the youth or whatever, or the schools. So I don't see any reason why these stocks should not be met favorably, unless it's economic, unless they just had such lousy business earnings, etc., that refer to the business side rather than to what you think things can do. Now, why do I not have this one absolutely notated fully? Oh, that's a pity. Okay, so this is a little different. This is a little different because it hasn't yet even made a new leg 8 to the upside in the monthly chart, but it is attempting to get back into that bounce area. And the bounce area says that at 31.52, fabulous move off the 26s. Hey, that's 5 points. That's nearly 18, 19, 20%. Says it could bounce a little further. And then the real test is going to come if DDD, 3D systems trading at 31.55 of 130, 37 is able to close, not break above, but close above the 33.17 high of the week of the 13th of Feb. Hey, good eye, whoever was talking about that. Question about ATHX. Yeah, I don't think I've ever looked at ATHX. Stem cell? Oh, I have. Of course I have. ATHX, Aether Systems, which I always thought it should be Ether Systems, but it's not. Nice move up in the weekly chart to leg E. Now it's pulling back. And then a bit of a failure in the, it went to an F. All right, it went to a rogue wave F. Do I do that now? Yeah, rogue wave. The rogue wave and the Chapman wave methodology is a technique that I developed years ago, chapter 11A. Let me just check that out, 11. You'll have to scroll down because it's a little bit further than that. Rogue wave, rogue wave, rogue wave. There it is. An introduction to the rogue wave. This chart pattern usually occurs after sell mode appears to be in progress. Having shown up on the previous BBH chart, that's the example. All right, let me just show you the chart. There it is. What happens is you've got a price that is moving along very nicely, and then there's like a sell signal, and the price is moving down, and you think, okay, I'm fine with that. And then out of the blue, there's a move to the upside that just spikes above the previous high, takes out the shorts, holds there long enough for new buyers, the people who got out and said, oh, I should never have got out, I'm getting back in, for them to get back in. And then later on during the day, whoosh, it goes right back, and within hours is trading back to where it was before it had the spike. Now, what I do is I talk about it in terms of waves. I'm a waveologist. I love waves ever since I was a little pisher. I've been standing at the beach looking at waves. So having shown up on the previous BBH chart, this is the biotech chart, it is unusual to come as a peak D. All right, I'm actually talking about this in terms of the wave count in the Chapman wave, but basically, let me just tell you what it does. The rogue wave analogy. The sign at the beach says high tide at noon. At 12 or 8 p.m., you're sitting at the water's edge, reading a book and relaxing when, splash, suddenly you're soaked and wondering what happened. Well, the tide might have turned, but that one wave didn't read the sign. And that's exactly what a rogue wave does. There it is. Everything's going along fine. It should have been pulling back, and then suddenly, whoosh, breaks out. That bar that goes to the new high fools everyone, and then boom, next thing you know, it's on its way down. And that way down says you've got to be somewhat careful. So I'd be very careful. I would not be touching this right now. Hold off, let it test 268 to 258. I would like it not to break 258. That was the low, was it? Let's see. Yeah, 258 if I remember. Yep, there it is. Was the low on the 26th of March. Let's see what it does. Don't do anything. If you haven't, I'd be taking some profits right now. I'll be right back. Basil Chapman sitting in for Steve Rhodes.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Hi, folks, we're back. Basil Chapman sitting in for Steve Rhodes. So let me just run the numbers. I haven't done that. So we're looking at the IWM having broken out. It is now in new leg C to the upside. Weekly chart, I've got it as F, but it could have recycled. Nothing technically wrong yet, so there's nothing really to do. And the monthly chart is still looking great. So this has been a leader, and is still a leader, working very hard over the last week. Early part of the week, it was struggling. And then bam, just broke out very nicely. So that's IWM, the QQQ series. We're looking at QQQ's been under pressure. I would not be surprised if there it is, Apple. I've been talking about Apple. Yeah, I've been talking about Apple for a while. I think Apple is just, it's under pressure. Something's going on with Apple. There's just like a waiting thing. Oh, there it is in the 10, CLNE. Jim, what a coincidence that you mentioned that. Nobody's even mentioned that in the last couple of days. I was going to feature this today as a stock out of all the oils, CLNE, which is clean energy funds. And a reason why I wanted to feature it for my subscribers as an experiment in when stocks are low price stocks are on a move up, sometimes you just have to close your eyes and buy them. I didn't have the courage to do it, so I took it off my list, but I had a whole bunch: CLNE, DHT, RTIX, NNNA, maybe in my show coming up, because I had some questions that I'll go through in my show coming up in the next hour. Nice. I don't know if you mentioned it. You mentioned it yesterday, because I didn't see that. I saw it as a scan that came up. So Clean Energy, Fuels Core, CLNE, it was an absolute darling years ago, always mentioned favorably, and it went all the way from the 2s to the 22s and 23s, and then it just kind of collapsed. But now I think it's back on the front burner just for at least a short-term period. So anyway, I thought I'd bring it up because I saw it in the den. What a coincidence! The name, I hadn't even seen it for months, maybe even maybe 6 months. Anyway, CLNE doing very well above the 200 period moving average. Leg E, buying it right now is real. I mean, you could get this acceleration continue, but the risk reward, even yesterday into today, would have been risk reward was pretty high. But these things have a way of just continuing higher, and you don't know when to get off the train. Look at this, NNA. I was going to feature this. I did feature it actually. No, this is not the one. It's it's one of the others. I don't even see it now. Oh gosh, that's a pity. PS. Yeah, here's another one. I featured this one at some point, and then I forgot all about it. Pioneer Energy, and look at that. I mean, these are fantastic moves in low price stocks, and that's what's happening. And that's what's happening in the IBB. The IBB is still moving high. Remember, I said hold off, have patience before thinking of shorting at this particular point. Why? Because I'm beginning to see all these little baby stocks. There's one was mentioned in the den, BCLI. Look at this. What a big spike to the upside. And then what I said was BCLI, I typed into the den at 502. It's in leg E, probably peak E today. I would take some profits off this right away. And I'd say I might put some of that back, not all of it, but some of it back. And I can't remember what I said. 478 holds the support because 466 is the 9-period moving average support over there in the daily. And the weekly is still actually acting quite well. That's why I say take some of it off, but keep your core position. And I think we're about to go to a break before my show comes on. I will follow up in the next hour. And I had a question, which is really a terrific question. Let me find it over here. I don't know if I'll find it now. Yeah, the question was, Manjeet asked me about the VXV. We'll talk about that when we get back. Hey, have a great day for signing off, and my show's coming up right after this, and we're looking at things.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.